Hello, I'm Thomas Übernight of Ahead CRM, and today I would like to give a little overview on what I do think about the Salesforce earnings of fiscal year 22, which have been just released today. So let's dig into it. Salesforce, as such, reported, not surprisingly, quite a good revenue number of 7.3 billion for this quarter, and an increase of their remaining performance obligation and the current remaining performance obligations by a sizable percentage. Why did I mark that? Because they are becoming interesting. So the remaining performance obligation increased steeper year over year than 4 quarters ago. This means business is good, basically, and getting better. The increased revenue of 27% in constant currency becomes interesting later on when we are comparing against other competitors. Just keep the 27 in mind. The guidance is what made the investors happy and made Salesforce stock rise after the numbers got published today, because they were a bit beyond expectations. Actually, the revenue and the profitability as well. So now let's have a brief look into how the revenue got together. We see sales, service, platform, marketing, and commerce as the 5 pillars that Salesforce distributes its business into. And what one can clearly see, the big piece of growth is the platform. Why is it the platform? Because for the second quarter now, we have the numbers of Slack in there, which haven't been there, well, 3 quarters ago. So what we can expect is 2 more quarters of steeper growth and then a slight consolidation, unless there is another acquisition going into the market and/or Salesforce succeeds in getting this part grow faster than ever. Let's look a little into the bigger picture. Of course, Salesforce is one of the 4 big CX players. On the other hand, well, there are a number of other ones emerging. Look at ServiceNow, look at Zoho. If you want to know more, just have a look at Paul Greenberg's CRM watch list. There you will see a couple of other interesting companies that are worthwhile looking at as well. Yet again, Salesforce is still the definition of CRM, and that not only by stock ticker, but by perception. And this increasingly is true for the CX branch as well. Now let's compare a little with the competition. My main and favorite competitive company to Salesforce starts with an S as well, SAP. They just recently, end of January, reported a 28% growth for their Q4 of 22. Means they are at the same pace as Salesforce. On a slower scale, of course, because the cloud growth or the cloud numbers of SAP are not on par with Salesforce. On the other hand, SAP expects their cloud revenue to grow faster than Salesforce for the upcoming, or for them, both of them now running fiscal year, with 23 to 26 versus 21% that Salesforce expects its growth. Yet SAP is perceived as having the weaker CX play. So this is quite remarkable that they want to grow and plan to grow faster than Salesforce, which might be due to them not only having CX cloud play, but also an ERP cloud play. Another competitor, Microsoft, they just reported their Q2 for 22 in February. And they, of course, are, well, a CX titan as well. Their Dynamics 365, which is roughly comparable to the Salesforce CX play, had a growth of 44%. Again, on another basis, but they significantly outgrow Salesforce at this time. Let's have a look at profitability, margin. What we see here is on the left hand, the bar graph and the lines embedded are Salesforce's revenue growth, and the lines are far more important and interesting, which are the profitability. They are the operating margin, which is the higher one, which had 15% in this quarter, and the non-GAAP operating margin, which is negative. Compared to that on the right side, we have similar SAP's non-IFRS operating margin, which is not equal to non-GAAP, but this has 30% almost, whereas the operating margin is at 16.7%. So what we clearly see here is that margins and profitabilities are razor thin on one side, and not so on the other side, where we seem to see quite a profitable growth. And we shouldn't forget that SAP is still the largest business software maker around. Mixed bag for SAP, basically, when we are looking at the revenue by region. What we can plainly see is across the board, Salesforce grows faster, which is especially true for EMEA, which is SAP's home turf. So there I'm a German, should have a look. Now, what does it mean? For Salesforce, to me, it seems that the times of outgrowing the market seem to be gone, which is also indicated by them no more publishing the famous slide of the famous analyst slide that said change of market share of the 5 big companies that have been there, where Salesforce consistently was faster than the other ones. They still are strong, very strong, which is particularly true currently for their platform, although this is mainly driven by the Slack acquisition. But 50% plus are a word that the competition needs to deal with. So to me, it seems that they are well on their way to become the world's largest business application vendor, although they are focusing on the CX side of the house. This may just be 1 or 2 years, then they might be there, unless SAP, as the biggest one, will find some more horsepower or grows a bit faster. Now, in general, Salesforce is growing right now about as fast as SAP, however, considerably slower than Microsoft. And if I say growing about as fast as SAP, again, remember SAP has also an ERP play. Now, what seems to be that especially in the CX area, Salesforce seems to eat SAP's lunch in EMEA. This continues to be interesting. And if you are looking at SAP's and Salesforce's revenue without Slack, then this seems to be, from a growth perspective, higher than SAP's, because SAP counts SAP S/4HANA into their cloud growth, and the cloud growth of S/4HANA is about twice as big as the overall SAP cloud growth. This means that the focus of SAP continues to be somewhere else. As I already mentioned, the margin of Salesforce are razor thin. Cash flow similarly, although this might have been affected by acquisitions that Salesforce just did. But what one can say in essence is that Salesforce is buying growth. Last but not least, there are 2 companies that aren't really CX players yet. They have quite a lot of the ingredients in place, just don't use them yet. So it will be interesting, and actually I'm waiting for moves to be done by Amazon and Google, especially in the light of Google already having one of the, well, one could say they, with all the consumer data that they have the mother of all CDPs, and they hired a lot of business applications executives in the past 2 years. So I actually expect that something is going to happen there, similar for Amazon. I mean, Amazon they already have a fairly strong, very strong cloud call center. They have a strong CRM system, homegrown, which they do not really sell to, well, do not sell at all to the outside. They have a marketing solution that they acquired years ago that they are using themselves, even are selling, just not talking about it. So there might be some surprises in the house for, well, the current crop of CX titans. That's it for today. Thanks for listening. Thanks for watching my analysis, and have a good evening.